Good morning. I'm Gregory Martini. I'm a certified public accountant, and I'm giving a brief presentation of the seminar that I provided for Pennsylvania State University at their Abington campus in the beginning of November. This seminar was directed to have an understanding of the Pennsylvania appeals process for all taxes, concentrating on sales taxes. I began my professional career in Washington, D.C., working for Peat Marwick and Mitchell. I worked there 10 years in their tax department. I left Peat Marwick and came back to Pennsylvania and worked at the Department of Revenue on the Board of Appeals. I was a board member on the Board of Appeals and acted on all Pennsylvania sales and use tax cases as well as Pennsylvania corporate tax cases. After working at the Department of Revenue, I began working for Ernst & Young, and I headed up their Pennsylvania State Tax Department. So we addressed all Pennsylvania tax issues there and represented clients throughout the world who did business in Pennsylvania. After Ernst & Young, I went out on my own, and I've been on my own for the past 20 years, practicing in the Pennsylvania tax area, concentrating on Pennsylvania sales and use tax. We also have an office in Atlanta, serving clients again throughout the country. I do all the Pennsylvania taxes, and my associates in Atlanta do various and sundry other states. Now, the presentation for the appeals process starts with, well, how does an assessment get issued? Well, the audit selection process at the Department of Revenue consists of selecting every Fortune 500 company that does business in Pennsylvania. They're audited every 3 years. The next criteria is Pennsylvania audits every direct pay permit holder every 3 years. After those two selections, the Department of Revenue also follows up with any assessment, any prior assessment on a company that was over $100,000. They automatically go back and hit that company again the next 3 years. After that, they look at a specific industry in Pennsylvania. For example, the newspaper industry. They would audit every newspaper doing business in Pennsylvania. Then to round out their audit selection process, they'll do a random sample of all businesses that are registered in Pennsylvania. Now, what happens when you get an assessment? Okay, if your company gets an assessment, the appeals process consists of, you have to file a formal petition at the Board of Appeals within 90 days of the mailing date of the assessment. Now, the petition can be filed either electronically or on the Board of Appeals petition forms. If our practice is, and this is a good practice, if anything you file at the Department of Revenue, you should get date stamped because the dates are sensitive throughout the appeals process. Now, once the petition is filed, for every petition filed that's in excess of $10,000, there's a bonding requirement. The bonding requirement, excuse me, is issued by the Board of Appeals and requests a client or a taxpayer that has an assessment to either file a surety bond, which will guarantee the assessment's paid if it's ultimately declared due and owing, or they request payment of the assessment. Now, if the company's in a good position, it can file a surety bond. If it's not, the next best thing for the company to do is they present their audited financial statements, and there's a criteria the department looks at to see if the financial statements are strong enough and indicate that the taxpayer can pay the assessment if it's ultimately declared due and owing. Now, the criteria generally is they look at the current ratio, which is current assets over current liabilities, and this measures a firm's ability, a company's ability, to pay its assessment if it's ultimately declared due and owing. The next thing they look at is the net income, and final thing they look at is the retained earnings. If these are strong, these numbers are strong, then the taxpayer will not be required to file a surety bond or pay the assessment. Okay, what's the next step now? After you go through the bonding process, then the case is assigned to a hearing officer. A hearing officer is generally, he may be an accountant, maybe a CPA, and the hearing officer sets up a formal hearing. When you go to the hearing, the strict technical rules of evidence don't apply to these hearings, but all evidence presented must be pertinent to the assessment. Now, the taxpayer can represent himself, or he can have an attorney or a CPA. When you go to the hearing, the taxpayer is sworn in, and the testimony is taken, recorded, and preserved as you go through the appeals process. Okay, after all, the board has 6 months to act on a petition. So if it doesn't act in the 6-month period, it can extend that period an additional 6 months. After that time, that's it.